Hi there, welcome to Kneppy Invests. Time for another video where I discuss a company that achieved an operational cash flow positive June quarter. And in this video, I'm going to be discussing a company called New Century Resources. I do have a history with this company, and I'll talk about that history in the next slide. Now, over the last few months, the share price of this company has been under pressure. We have seen it drop. The valuation of this company is looking more and more attractive. And I do like to buy mining companies when the share price has been under pressure, when the sentiment of the company is at a low point. I rather buy a mining company at that point in time because you can get value when that sentiment is at, won't say all-time lows, but is fairly low. And that's where New Century Resources is right now. So before we discuss their June quarter Appendix 5B, just a few facts in regards to New Century Resources. New Century Resources were once called Attila Resources until about 2017, when they acquired the Century Mine in northwestern Queensland, which was a zinc mine. In fact, Century Mine was at one point one of the largest zinc mines in the world. I think they started production in 1999 and finished in 2016. And I do have a bit of history with Century Mine because I've been working as a meteorologist and an aviation forecaster from about 2007 to present times. And during the period between 2007 and 2016, we actually had to do a Century Mine aviation forecast. And then all of a sudden, around 2016, it stopped. And that's when the mining of the mine ceased. Now, Attila Resources then bought Century Mine and they restarted operations in August 2018. They changed the name, of course, to New Century Resources, extracting zinc from tailings. So that's the history behind New Century Resources. The ticker code is NCZ. The market cap of the company is just over $200 million. That's at 17 cents. Receipts for customers, so extracting zinc from tailings has been successful because receipts over the financial year 21 was 296 million, and they were operational cash flow positive by 45.7 million. And just the fact that the EV to operating cash flow is less than 6 makes this company quite attractive. So this company is producing a fair bit of cash in operations right now, and that can be important moving forward for the company, particularly because they are talking about starting up a new mine called Silver King and East Fault Block. If you do want further information on New Century Resources, look at their Appendix 5B that they did release on the 29th of July. I also watched a video conference with the managing director called Patrick Walter, and I'll talk about that video conference during this video. Before we have a look at the June quarter results for New Century Resources, I just want to go back to the March quarter to see how the company was performing at that point in time, and then to see how they progressed during time. Now, Century Mine, or New Century Mine, what do they call it now, is in the northwest of Queensland, and it's to the northwest of Mount Isa, and there is potential during the wet season that operations could be affected. I am not absolutely 100% certain about that, and the March quarter would be the quarter where they might be affected. Receipts to customers, however, was 64.9 million, and they were operational cash flow positive by 3.2 million, which does seem to be on the low side when they do have receipts of 64.9 million. They began the quarter with 51 million and finished the quarter with 21.2 million. That is a bit of a red flag for me, that they did see cash in the business decrease by $30 million. Now, one of the reasons why they did decrease the cash by that amount is they did repay debt, and that repaying of the debt was 21 million. So even though the cash did fall by a large amount, it did go to, or was for a good reason. Repaying debt, in my opinion, is a good reason. They also spent $6.8 million on capital expenditure. So let's have a look at the June quarter results to see how the company did progress over the next 3 months. Well, receipts from customers did explode between the March and June quarter, up to 91.1 million. And because receipts really grew by a significant amount, we also saw the operating cash flow of the company improve as well to 26.3 million. I do have some questions about the increase in receipts And there is a reason I do have some questions about that. And that's actually the main reason I wanted to watch the video conference with the Managing Director, Patrick Walter. Now, they began the quarter with $21.2 million and finished the quarter with $35.7 million, even though they maintained capital expenditure at about $6.2 million. They also spent $3.3 million on non-current assets. Now let's look at some other facts in regards to their June quarter results. In the video conference with Patrick Walter, the Managing Director, he really focused on this slide from one of the presentations. I really highly recommend going through any presentations a company does release when they disseminate any sort of quarterly or half-yearly or yearly report, because they can break it down into easier read information. And I also recommend listening or watching any sort of video conference a company might release. So I watched the video conference because I wanted some clarity in some of the information I did get from this particular slide and the quarterly report, in particular around the cash flow and the cash receipts or customer receipts. Now, Patrick Walter did mention that this was a polarizing quarter. Some of the positives in this quarter was the operating cash margin, 30.7 million, adjusted EBITDA, 27.7 million. And the main reason those numbers were quite high was because the cash receipts in the quarter jumped significantly from the March quarter. You might think because receipts grew significantly, that means the production in zinc would have been significantly higher as well, but it wasn't. It was only slightly higher, increasing from 30.4 thousand tonnes to 31.7 thousand tonnes. In fact, over the past 4 quarters, zinc production had been coming down. And that's actually one of the questions I did want to raise, or see if there was any information on how did they increase the receipts for the June quarter. Were they stockpiling zinc over the past few quarters and they decided to sell a lot of zinc this quarter? And is that going to affect the September quarter results? So that's one of the main questions I wanted to hear discussed. It wasn't really discussed in this video conference. Now, some of the negative things in regards to the June quarter was all about recovery, 46% recovery. And he was talking about the Jameson cells in late May, and they actually increased the recovery, but then it fell back during June. So based off his commentary in the video conference, he was a little bit disappointed about the recovery rates during the quarter. They also talked about C1 costs, about stable from the March to June quarter, not quite as low as we did see, as low as we have seen over the past year, but definitely has got better in the past 2 years. So if you want more information on this particular slide, I do highly recommend watching the video conference. It does go for about 30 minutes long, but you can get a lot of information about not only how they performed over the past quarter, but also what they're planning for the future mines, in particular around Silver King and East Fault Block. Always like to look at quarterly receipts and operating cash flow for a company through time, particularly quarter receipts, but I decided with New Century Resources to include also operating cash flow. Now, this company has increased the shares on issue about 5-fold over the past 4 or 5 years. And one of the reasons they've done that is because they've been highly operational cash flow negative, even though they have been in production. You can see that with operating cash flow in 2020 being around about 30 to 33 millions during the 3 quarters, even though they were in production. But generally, quarterly receipts have been going up through time, and that's exactly what you want to see with the company. And if they can increase the cash receipts and keep a control on costs and get good prices for the zinc they are selling, more than likely we will see the operating cash flow go up as receipts go up. And that's exactly what we've seen over the past 18 months. So even though in the March quarter 2020, they were operating cash flow negative by 33 million, even though they did receive $48 million of receipts, we have seen the finances of this company improve during the next 6 quarters, and that's a good thing. Now, I've already talked about why was there a significant increase in receipts for this quarter, even though zinc production didn't increase. That's the main questions I do have. And there is that potential that the September quarters could be a little bit disappointing based off the June quarter results. But I don't think the market has responded to the June quarter financial state of the company in a way where they're thinking that sort of quarter's results will continue over the next few quarters, because the share price has been under a little bit of stress in the last few months. I don't think you can look at one quarter's results in isolation and take anything away from that. So the June quarter results do look really good and quite stellar, but you might make the wrong move if you just look at that one quarter with blinkers on in isolation. You have to look at the whole history of the company. And they did provide some guidance for financial year 22. And based off the guidance, production will increase. So for financial 21, they did produce about 128,000 tonnes, and they are expecting between 130 and 145,000 tonnes for financial year 22. And they are expecting the cost to come down as well, potentially by a fair bit. And if they are able to achieve that guidance, there could be good value here based off the results for financial year 21, which I haven't seen yet. They haven't actually released their financial year 21 results just yet. But based off this increasing guidance, there is potential value with this company moving forward, because at a market cap of $200 million, this company being operational cash flow positive, producing money. And in the video conference, Patrick Walter also talked about they want to develop the Silver King mine, which is primarily a lead resource mine. And there was a question in regards to potentially a capital raising to start up their mine in the future. And he mentioned the cash flows they will receive before they start up their mine into production will be enough that they won't have to do a capital raising. And that is actually attractive to me, because they've done a significant amount of capital raisings over the past 4 years, increasing the shares on issue by 5-fold, and we don't need more dilution right now. So if they can achieve that, get this new mine into production without doing a capital raising, that would be a good job by management, in my opinion. Now I'm just going to focus on a couple of charts for New Century Resources. The weekly chart going back to 2017, and the reason I want to go back to that time period was in 2017, I think it was about March, when they announced, Attila Resources announced they were buying Century Mine. I just want to include that period just to see the amount of hype in New Century Resources at that point in time. In fact, the share price increased from about 19 cents to a high of $1.60 in about 3 months of trading. So there's a lot of hype in this company around that period of time. And that share price high, which was reached about September, October of 2017, from then up until the COVID-19 financial panic, when the share price got down to 5 cents, we saw the share price in a well-defined downtrend. But ever since that COVID-19 financial panic low, the share price has been consolidating, sort of going sideways. No breakout in the share price just yet. And that's the main thing I'll be waiting for if I was thinking about taking a long-term position in this company. I'll be waiting for a breakout of the share price to the upside on positive financial news with high volume. At this point in time, just looking at the weekly chart, we just are trading in a range, and you'll definitely be able to see that range when we look at the daily chart in the next slide. As we turn our attention to the daily chart for New Century Resources, I just want to go back just prior to the COVID-19 financial panic, because the share price was in this long-term downtrend from 2017. And the bottom of that downtrend was actually the COVID-19 financial panic depths, which was around March 23rd of 2020, when the share price of New Century Resources got down as low as 5 cents. And then we saw that rapid recovery in the share price. In fact, there was a 5-fold increase in New Century Resources share price over a 2-month period. And the top of that share price during that recovery was around about 25 to 26 cents. But ever since that top in the share price, at the end of May 2020, the share price has just been going sideways over the past 15 months and trading in a range between about 15 cents to, which is the bottom of that range, to about 26, 27 cents, which is the top of that range. So this point in time, when a company's share price is trading in a range, what you want to wait for is either a breakout of the share price to above the top of that range, or just waiting for the share price to move into an uptrend on high volume, with the catalyst of the movement into uptrend on high volume, a positive financial news. That's what I'm waiting for with New Century Resources right now. Now, if the share price gets any lower than it is right now, which is around 17 cents, so it moves towards 15 or even 12.5 cents, I might take a position at that point in time simply because there is significant value at those prices. So that's what I'm looking for with New Century Resources moving forward. Not many more standalone videos to do for me to complete my mission on covering every single company that did achieve an operational cash flow positive June quarter. In fact, there's only 5 more companies that I'll be doing standalone videos for, and 4 of those companies are Mosaic Brands, MCS Security, Dynamic Drill and Blast, and Kroon Energy. So look out for videos on those 4 companies in the next week. That's all I have for this June 2021 quarterly report for New Century Resources. If you do have any thoughts about this company, particularly if you know this company quite well and you just like to give us some of your insights, I'd love to read those insights because I don't know a lot about this company. I don't know a lot about their Silver King and East Fault Block potential mines. And I'd like to know a little bit more, particularly if it's from someone who's done a fair bit of research on the company. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.